Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Analyst at GDMFX, with today's outlook. Starting with the Japanese yen, it's heading for its first weekly gain versus the dollar since August, as stock declines and signs the global economy is slowing boosted demand for haven assets. Japan's currency has risen this week versus all except two of its 16 major peers, as European Central Bank President Mario Draghi said there were indications the region's economy is losing momentum. The yen was little changed right now at 107.98 per dollar, having appreciated 1.9% this week, the first gain since the period ended August 8. Moving to Australia, the currency over there dropped after touching the highest level since September 23 as traders reconsidered data showing employers unexpectedly cut payrolls last month following changes to labor market figures by the Statistics Bureau. Now, the Aussie fell 0.7% to 87.83 cents after advancing to 88.99 cents. The euro declined for the first time in 4 days as European Central Bank Mario Draghi again called for structural reforms in the region and pledged to expand stimulus measures if needed. He also said the investors predict the European Central Bank will start increasing interest rates by 2017. Now, the greenback gained also 12 of 16 major peers as Goldman Sachs sees it's strengthening more versus the euro. The USD currency erased earlier losses after initial jobless claims unexpectedly fell last week. A little bit more interesting right now in the commodity sector. Gold headed for the first weekly increase since June as concerns that the global economy may be faltering stock speculations for more stimulus. However, this is boosting the demand for a store of value. Gold is 2.7% higher this week, set for the biggest such advance since the period of June 20. As of course, investors are assessing the timing of rate increase in the US, which the Fed pledged to hold near zero for, quote, considerable time. The price climbed with $15 to $12.34 in yesterday's trading session, touching the 50 level of the relative strength index on the daily chart. Oil, West Texas Intermediate, extended its slump into a bear market on speculations that rising global oil supplies will be more than enough to meet slowing demand. Crude oil declined as much as $2.18 to $83.59, the lowest since December 2012. The prices are down 6.1% this week and more than 20% below a recent peak, meeting common definition for a bear market. As we saw, U.S. oil production increased to 8.88 million barrels a day last week, the most since March 1986. Important events in the economic calendar for today, UK trade balance and Canadian unemployment rate. Stay tuned, keep an eye on the calendar. Thanks for watching, that's all for today.